Okay. Welcome, everyone. This is Brian Belay. I'm here with Chris, CEO and founder at Kingscrowd. So for those who are Kingscrowd members or who have attended these in the past, you're probably used to Chris asking most of the questions. So we thought it would be fun to kind of flip things a little, turn the tables, and I will be asking Chris some of the questions. So throughout this basically 30-minute webinar, feel free to put any of your questions into the Q&A asking section, and then we can ask those to Chris. And basically from there, we'll take it and we'll kind of let Chris do an introduction. So real brief, maybe, I'd like to just kind of take 30 seconds and kind of let you know where I met Chris. So it was over a year ago, and I've been investing in equity crowdfunding and the private markets for over a year. And I had actually come across Kingscrowd on one of the platforms that they were currently raising on. So that's where I met Chris, and now I'm happy to say that I'm both a paying customer because I believe in the value, but also a very happy investor in Kingscrowd. So I'll hand things over to Chris. Chris, why don't you give an introduction and a little bit about Kingscrowd?
Yeah, thank you so much, Brian. Really appreciate it. And thank you everyone for joining today. So as you mentioned, Chris Lustrino, founder and CEO of Kingscrowd. Been at it for about a year. My whole background is basically in private equity markets and working at venture-backed startups, and really excited to be able to create this company and try and drive real change and create a private market that works for everyone. So yeah, thank you very much, Brian, for hosting today. We're really happy to be able to do this.
Absolutely. I'm glad to be here. So one of the most important things, right, with early stage companies, because the idea is so early, you're still trying to get traction, is the founders themselves. Would you be able to give us a little bit of background about, more about your background and why you're the right person for this?
Yeah, absolutely. So I always kind of say there's a couple of elements to starting up. There's the short game and there's the long game. So the short game, what typically happens is you're dealing with a lot of just hustling and trying to make things happen, right? Get something off the ground. So my background, as I mentioned before, worked in private equity consulting for about 3 years. While I was there, I did about 30 due diligences on private companies and realized the inefficiencies that exist in the private markets, which were two key things. That was transparency and access into the private markets. So what do I mean by that? So transparency, basically we were doing all of these deals away from the public. No one actually knew what was going on in these deals. And even when you'd see good or bad companies, they could always invest and make it look good. And that seemed like an inefficient way to be able to invest effectively. And then in terms of access, when we saw a great deal, I knew that I couldn't partake in it because I wasn't an accredited investor, AKA the simple term being a non-millionaire, right? And so I thought those things were wrong. So in the short game, what I ended up creating was a blog, a fintech blog, where I focused on alternative investing and lending companies that were creating transparency and access in the private markets, thanks to the Jobs Act. Did over 70 founder and CEO profiles over a 2-year period. Everyone from pre-seed companies you never heard of to sitting down with billion-dollar companies like Lending Club with their CEO and having great conversations about how we're disrupting the private markets. And that blog was eventually acquired. John Fanning, who was the founding chairman and CEO of Napster, asked me to come and found this company. Basically because I had knowledge of the market and seemed to have a lot of hustle to be able to get all of these important people to want to kind of partake in what I was working on at my blog. And so for the short game, basically I was a guy who was willing to go out, learn as much as he could about a market, get really into it, be really passionate about it. And then the long game, I've surrounded myself by more people like John Fanning. So John Fanning has been investing in companies for the past 20 plus years. They're part of one of the most famous companies ever, right? Napster. And then he and his family were the first investors in Uber. And then in addition to him, we put some amazing advisors around us. So Patrick Hellstrand, I don't know if anyone knows By Chloe. It's basically an all vegan restaurant that's really taking off. He's basically been the CEO of venture-backed startups for the past 10 years or so. Really amazing individual. We have other former VCs around us as well. Barry Curlin's another advisor to us. We have a lady who's built real-time analytics platforms for the public markets, who's one of our advisors. So I kind of know how to get things going, and then I put people around me who know how to build really big companies and be successful. And so I think that's why we have the right pieces to kind of work towards what we want to do.
That's awesome. No, that's really helpful just to know a little bit of your background as well as the team at Kingscrowd that's behind it. So why don't you talk a little bit more about Kingscrowd? You kind of alluded to, equity crowdfunding, the private markets and the Jobs Act. What is the unique problem that you guys are solving?
Sure thing. So essentially what we're looking at today, right, is what I call the online private markets. So it used to be, unless a company was listed on a public exchange like Dow Jones or NASDAQ, think Walmart, think Facebook, unless you were a millionaire investor or you were a venture capitalist or a big private equity shop with lots of money to buy private companies, you could not transact in the private markets. That represents 93 to 97% of all assets in the US, by the way, is private companies. So the vast majority of things in this country you can't invest in unless you're accessing private assets. So fortunately, the Jobs Act basically created all these opportunities that said people should have access to these deals and we should be creating disclosures around these deals so that people can make informed investment decisions in the private space. We now have 50 marketplaces that exist, 50 plus, that are enabling online startup investing and frankly from pre-seed to pre-IPO. So you can invest in late stage companies, you can invest in really early stage companies, which is awesome. But what we have is a plethora of options to invest in and nothing to help people make easy, informed investment choices. So imagine not having a brokerage account in the public markets and having to have an account with Dow Jones and NASDAQ and whatever else, right? And imagine having to find every one of those deals on your own with no informed opinions on how to invest. So what we're trying to build is the first Morningstar type or Bloomberg type ratings and analytics service that provides you the research and the ratings, the analytics, the education, all of the support materials you need to be able to make an informed investment decision in the private market that's now accessible online.
That's awesome. No, that's a great explanation. And I know another thing that I think you've said is, where Kingscrowd is today and the problems that you guys are solving is going to be very different than where you're going to be in, say, 12 months or 18 months from now. Can you maybe talk a little bit about your near-term goals and then kind of what your longer-term vision for Kingscrowd is?
Yeah, absolutely. So near-term goals, what we want to launch is our ratings platform. So what does that look like? Essentially what we're trying to do is aggregate the entire market, all 50 plus platforms, track all of the deals from amount raised, terms of the deal, past 2 years financials, all of the general disclosures that need to be made. But on top of that, add in our proprietary rating system. So one of the things that's always been done in the venture market is everyone essentially utilizes what they call heuristics. Oh, I have a feeling about this guy or this gal. I think they're going to be a great founder. They remind me of this other founder that I know, which is good, but it's been proven to not often work, right? 9 out of 10 investments in the venture market actually fail. So what we want to do is develop a more data-driven process to looking at startup investments. So we're building out a ratings platform where literally we look at 5 key dimensions of the business for early stage investments. So that's market size, founder experience, terms of the deal, business model, and product and service differentiators. But we're not just going to say, oh, that gets a half out of 1, that gets a 0.25 out of 1. It's actually going to be listed questions with certain scales built in. So for instance, founder experience isn't just going to be, I like that person. Instead, it's going to be, how many years industry experience do they have? And there's a scale for that. How many years founding experience do they have? And there's a scale for that. And how many exits do they have? Or do they have exits at all? Those are the types of things that actually more experienced founders with more exits, et cetera, are usually better people to back, right? So we want to create a data-driven approach that we can look at. So then we can start to distribute that and provide that to family offices, RIAs, wealth advisors, individuals. We can license those ratings to financial organizations like self-directed IRAs. One of our partners is Rocket Dollar. So over the next 6 to 12 months, the goal is get that ratings platform up, start rating companies and providing access to those ratings to these different financial organizations and individuals. That's the kind of near-term goal. The long-term vision for the business is if we rate 1,000, 2,000, 10,000 companies over the next 2, 5, 10 years, well, suddenly you have millions of data points right across all of these companies, and we're following how these companies progress over time longitudinally. So, okay, we thought it was a 5 king rated company today, but what's their future valuation? What's their eventual exit? How are we performing? And you can actually start to apply some AI models there and see, are there predictive factors that are driving to long-term success for these early stage investments? That allows you to create diversified investment funds. That allows you to license the data to VCs, whoever else, and really create an efficient online private market. So that's where we want to get. But initially, it's get the ratings platform up, get in the hands of as many people as possible, and start seeing how people interact with our research, and then what type of action does that lead to.
No, that's perfect. That's a great overview. I know another thing that, a lot of people are probably wondering as you're building towards these products and for helping your customers is, is there anyone else out there if there is competition, that type of thing. Why don't you talk a little bit maybe about the competitive landscape into getting towards your products?
Sure. So the only thing that's out there today, unfortunately for people, is kind of like financial newsletters and publications. So one of them is early investing, and they're actually a group that we've started to work with. So early investing, basically, I think it's around $50, $100 a year. You'll essentially get once a month deal picks that they really like in a newsletter, which is awesome. It's a really valuable service. They drive tons of money into deals. But they're not providing in-depth analytics. They're not looking at every deal in the market. They're basically giving you 10 to 12 picks a year to invest in. So we're actually collaborating with them to actually provide them more content to their users and more deals and more underweight deals and things like that. So that's one of our competitors, but we're actually finding ways to collaborate and work together. That's kind of the biggest one out there. This is unfortunately a really underdeveloped market. And I talk about it all the time. I mean, imagine if the public markets existed and you didn't have the Bloomberg terminals and you didn't have the Morningstars and you didn't have the Wall Street journals. All of the activist investors and all the big funds that invest in the public market wouldn't be doing so, right? They need those resources. And so if we want this market to tick and grow, we need to provide these types of things. And that's why we think it's a really interesting point to come into this space, because we're so early and no one else is in it yet. So it's an opportunity to build in differentiation, because frankly, no one else has built the data sets and built the market opportunity just yet.
Okay. Now, I think another thing that's of interest to potential investors out there is, what, if any, traction have you guys kind of seen today? Can you maybe talk us through a little of your numbers in terms of your current business, any projections, that type of thing you can speak of?
Sure. So basically right now on the B2C side, so to, direct to consumer, we have about 4,500 subscribers. About 115 of those are paying a little over 20,000 annual revenue. In all reality, we actually haven't pushed that very much. We've kind of let that just grow organically. We play with different marketing tests and whatnot, but we really saw this opportunity over the past 6 months that there's larger financial institutions that want access to our data. So on what I call the B2B2C, which is essentially we sell to an organization and then they provide it to all of their end users and customers. We have about 3 organizations right now that have agreed they want access to a ratings platform once it's live on a licensing deal, which represents somewhere around 500,000 to 1 million users. So once we're able to launch with them, obviously we'll have a lot more access to our ratings, a lot more people will be looking at us, right? So that's on the licensing side. And then the last side is basically B2B, selling to family offices, registered investment advisors, and wealth advisors. The reason why these groups want to utilize our product is they're trying to find ways to differentiate. Everyone has the same ETFs, the same mutual funds. They're trying to find a way to provide a product that's more interesting to their investor base. And so though the private markets aren't their core competency, if they had a research tool that gave them vetted deal flow, then they would be able to invest in this space. And so we have a few family offices. We have one that said, as soon as this thing's live, I want to pay you and I want access to this thing. We've had several registered investment advisors tell us we want to be like your earliest beta users. We want to be using this, trying this with our customers. So across all of those dimensions, basically the 2-year goal is to get somewhere between $500,000 to $1 million in annual revenue, with 2 to 3 licensing partnerships actually working, fully functioning, with a funnel of additional opportunities available, 25,000 subscribers on the direct consumer side, and then 2 to 3 family offices and a handful of registered investment advisors and wealth advisors actually using the product, paying for the product. And then the goal would be at that point to raise a larger round to essentially throw fuel on the fire and grow the business quickly.
Awesome. And this is just a reminder too, if anyone's joining us late, you can feel free to throw any questions that you have in that question or answer box in the bottom. One other question. So Chris, what do you see as the biggest obstacles to getting and say achieving your 12-month goals and then further out than that?
Yeah, so I mean, there's so many things that could go wrong when you're a startup, right? But if I had to simplify, I'd say technical is a big one. So, well, technical and capital raising, those are probably components that come together. So essentially, the reason why we're raising this $1 million round is to be able to hire out the team that we need to execute on the opportunities we see in front of us, right? So hiring a full stack developer, hiring an investment analyst, hiring a director of investments, and then having some outsourced support on the development side as well. Being able to move quickly and iterate on that ratings platform and get it right so that we can execute and integrate with these licensing partners is really, really important. The other thing is not only from our side, but the licensing partners that want to utilize us will also need to integrate with us, right? So there's technical components on both sides. Those things always take extremely longer than wished, desired, or expected. So though we're hoping that it's a 12-month we kind of hit, that's why we've kind of built in this 2-year buffer to be able to reach getting those few partnerships live, because I'm sure there'll be many complications along the way that can slow that. But that's kind of the roadblock that we'll probably hit.
Awesome. And I guess for some of the investors or potential investors that may be on the line today, can you talk a little bit just about, Netcapital and how equity crowdfunding works to be able to help them get started?
Yeah, absolutely. So Netcapital is one of 46 FINRA registered portals that enable these online startup investments. And literally the way it works is I've gone and listed Kingscrowd on Netcapital, right? And now you can go there, you can look at the offering. At the bottom of the offering, they have an explanation of all the terms of the deal. So this is essentially what you kind of call like the term sheet that venture capitalists provide to startups. It says, hey, here's how we're raising money. We're raising money at a $4.6 million valuation. Each share is worth $1.80, whatever the terms of the deal are, right? And then you can look and say, okay, how much money do I want to put into that deal? The minimum is typically around $100. And then you throw in the amount of dollars that you want to invest, and you'll own that number of units, shares, whatever it is in that company. And now you hold that security and you own it. Everything on Netcapital is what they call like a common share. So essentially you're owning direct stock into that company rather than a convertible note or a SAFE, which are different instruments that are sometimes used by VCs and angel investors. But it's really simple and clear. You own this much of the company. And then the cool thing is after a year of owning that stock, they actually have a secondary market on Netcapital where you can actually sell your shares. So if you see that the company's doing really well and you want to sell a portion of it to make a little bit of a profit, you actually can. So there's some unique opportunities there as well. But investing across the platforms, looking for a diversified set of investments is really important. So we always say you should be investing in, 10 to 20 companies in your portfolio. And that may mean that you do 20 companies a year. That may mean you set aside $5,000 to invest over 4 years. Either way, you want to get, 15, 20 deals into it. That way you have a diversified portfolio that hopefully you're going to have some losers, but the winners will kind of offset that and still lead to relatively decent returns.
Okay. And I have maybe one interesting question.
Sure.
Let's assume you are interviewing yourself here. What do you think is one of the biggest questions that you would be asking yourself about your current business in Kingscrowd?
Wow, that's a tough question. What would I be asking myself? I think a big one that I've heard is, hey, you're a really young founder. So I'm 26, right? I'm 5-6 years out of school. I've had a couple of jobs, but kind of what qualifies you to be able to manage this? And I know we talked about that earlier, but that's one that's definitely come up. And again, for me, it comes back to surrounding myself with the right people who have experience and industry experience. The other thing is, one of the things that I always say is it's about industry experience and it's about knowing your market. One of the things about this space is that it's only a few years old. So even though it's really, really young, I'm one of the few people that's actually been following it since literally the day it became a market on May 16th, 2016, and wrote a piece about it, right? And have been discovering and learning about it since then. So being so integrated into it, I actually have a lot of older people coming to me asking me questions about this space because they know nothing about it. So though I'm young, I think we put the right people around me. And then in addition, I actually have a lot of industry experience for a relatively young market.
Awesome. I guess any other thoughts? I'll take any other questions from the crowd. If looks like there's one question here. You mentioned making a number of investments into your portfolio and getting stock out of it. Is there a mechanism in crowdfunding to get preferred stock?
Yeah, great question. So it basically just depends on the terms of the deal. So where I've seen the most opportunities to get preferred stock is on Seed Invest. They typically do what they call a side-by-side offering of Regulation Crowdfunding and Regulation D 506C. Regulation D 506C is only for accredited investors, but everyone gets the same deal. So there are deals on Seed Invest that you can get preferred stock in, which is great, but all the ones on Netcapital are all common. If you're investing in a convertible note or SAFE, oftentimes the terms of those convertible notes are SAFEs and you need to read through them, but it converts at the next round of venture financing. And typically when a venture investor comes in, it's preferred stock. So if you're on the convertible note, you'll go to preferred stock once the conversion happens. Again, you need to read through the documents to make sure that that's what they're saying in the note, but that is typically how they work.
Awesome. And just another thought as well. Can you talk a little bit about why you're doing equity crowdfunding? I know when companies and startups go to raise funds, they have a bunch of different options, right? Can you talk about what some of the advantages are, or what some of your thought process was in going through and choosing to do equity crowdfunding?
Yeah, absolutely. So, one of the main reasons I hear people don't want to do it is because they actually have to disclose their financials and they need to say how they're doing or the past couple of years. And I always kind of say, well, what do you have to hide? And if you can't explain away wonky looking financials, then maybe you have a real problem, right? And there are plenty of companies, believe me, there are so many companies in the venture market that have terrible, terrible financials. And that's okay though. Again, as long as you can explain the story as to why, hey, we're investing a ton in R&D and we're not gonna have sales for 3 years. Okay, I can get behind that. But if it's, hey, we burned through a ton of money and we can't figure out a market, that's a bigger concern. So I don't have concerns around our story. I feel pretty confident that we're doing all the right things, we're taking all the right steps, and I believe that we need to provide transparency and access into private markets. So I don't want to do a private transaction where everyone can't be involved. At the same time, I recognize that I think something people don't realize is public markets is 95% made up of institutions. Only 5% of investments are made by individuals. So in this space, we need to get more institutions, we need to get more VCs looking to invest online into these deals if we really want this market to tick. And so I'm trying to use our own selves as a way to drive that, because if they see me coming into this space, building a ratings market for the space, building in credibility for the market, well then, maybe I'm someone they want to get behind, and I'm saying, well, if you want to get behind me, you have to get behind me in the way that we want. And kind of forcing their hand to go the way of trying out this transaction online. And if we could be a good representation of this market, we can help to drive people into doing this more often. So I'm a believer in the space. I genuinely think that over the next 5 to 10 years, we'll see more pseudo public private investors. So family offices will be pseudo VCs and public market investors. Hedge funds will be, hedge funds for both the private and the public market. We're going to see more of that, and we need to get more great companies listing on these platforms. And so we think it's the right approach to take.
No, that's perfect. And again, for all the potential investors, right, this regulation crowdfunding raise has currently a 1.07 million cap. So a follow-on question to that for you, Chris, would be, are you considering your equity crowdfunding, moving it into, say, Title IV, which is that Regulation A+ in the series, in the future, whether that's, your Series A, however many years out, or what do you think that might look like?
Sure. So, my goal would be to continue to raise capital via these online platforms. Now, it may be so we've done Netcapital and we've done StartEngine to date. And it was great to get this new experience, new exposure. When we were on StartEngine, I think we got 30 or 40 paying customers from StartEngine trying us out because they were like, hey, I'm investing on this platform. I should probably have the tools to help me do that in an informed way. So we've seen that, which is really cool. So we'll probably continue to raise money via these platforms, whether it be a Reg A+, whether it be a 506C, whether it be a CF, some form of that we will continue to try and do on a, whatever basis we need to raise that capital.
Sorry, I was muted there.
No
just
problem.
a quick thing. So for potential investors or anyone that's looking to learn more, what's the best place for them to go?
About Kingscrowd?
Yes.
Yeah, so I think that the best place to go is just to our offering page. We kind of lay out all of the dimensions of the business, and if you have any questions, you could post them on the bottom of our offering page, and then we'd be happy to answer. We really do try and lay everything out there. We also have our pitch deck there, so you can check out kind of our near-term and our long-term vision and goals for the organization. So hopefully you find that helpful, and then, like I said, ask any questions you want on there, and we'll be sure to answer them.
Awesome. Thank you. Is there anything else you'd like to add? We're starting to come up on the 12:30 mark here, but anything that we didn't touch on that you'd like to just let investors know about?
Yeah, so I think, if you're on the edge about investing in Kingscrowd and you're like, oh, I don't know, I would really, encourage you to think about the opportunity that's in front of us. So there's very few times where new markets are created, right? And this regulation was created back in 2012. It was fully enacted by 2016. It said, we need to make the private markets accessible to everyone. And that's a pretty revolutionary thing. There's $13 trillion in private market assets, 13 trillion that have not been tradable to date. And suddenly they are, right? And so while we've only had billions pour into this market to date, we're seeing large financial institutions have a real interest in exploring how to get into this space. We're seeing, large brokerage companies, right, that provide you access to public stocks wanting to get into this market and provide options that are on Start Engine and Netcapital, et cetera. What's going to happen over the next 10 years is we're going to see this transformation of what it means to be public and private. I mean, Andreessen Horowitz, the most famous venture capital firm in the world, right? They just became, I believe, a registered investment advisor instead of a VC firm because they want to be able to invest in both the public and the private markets because they see growth post it being a private company. So everyone is recognizing that there's opportunities up and down the entire space, and they need to be able to transact in that. And these marketplaces are providing that. But we don't have efficiencies yet. And so to become the first ratings provider for a brand new market and be first to market is really, really exciting. Now, there are challenges that come with that, absolutely. But if we get it right, the opportunity sets us up to be, I think, one of the most important financial services companies over the next 10 to 15 years. So that's the place that we want to move towards. We've seen even Morningstar, they acquired PitchBook for $225 million, which simply provides pricing data on private companies. We're doing so much more than that, right? We're going many, many layers deep. We've heard from VCs that they want to start to use more AI and data-driven decision-making. We're going to see that transformation happen. The VC model has been broken for a long, long time, and it's finally finding a way to be improved. It's going to take a while for everyone to kind of adopt and be comfortable with making transactions online, but I think the private space is going to look a lot more like the public markets, and we're going to be that ubiquitous solutions for this space, which I think is really, really exciting. So anyway, if you don't see the vision today or you think, oh, the market's really small, if this thing takes off, I think we're nicely positioned to be a really, really important company.
No, I can definitely say, just as a user of the Kingscrowd platform, being a Reg CF investor myself, it's extremely helpful just as kind of that supplement to the due diligence. And then as you've just been discussing, there's all these other kind of tangents in different related markets that you guys have to be able to get into. So I think it's exciting. Awesome. I guess to start wrapping things up, if anyone thinks of any questions after this webinar, what's the best way to get in touch with you guys?
Yeah, so as I mentioned, usually the best way is to just put those questions right into the Netcapital offering page, and I'll be happy to answer those.
Awesome. Well, thank you very much for your time, Chris, today. It was great chatting with you and flipping the tables for once, so putting you on the other side of the interview questions.
No, I really appreciate that, and I hope everyone becomes an investor in Kingscrowd, and just let us know how we can continue to improve and be a better organization, and we look forward to working with all of you.
Awesome. Thanks, Chris.
Hey, have a terrific day. Take care now.